An extract from a certain balance sheet is given here. It says that the machinery as on 31st March 2006 was 8 lakh and as on 31st March 2007 was rupees 12 lakh. Then less provision for depreciation 2 lakh and 3 lakh for respective years. That clearly means, students, that the figure given here, that is 8 lakh and 12 lakh, is the machinery at cost. Once we deduct depreciation, then we have written down values. So in case question mentions about the cost of the asset as well as the depreciation, then we should prepare machinery account at cost, and provision for depreciation account will also be prepared. So let us transfer these balances to these accounts and try and calculate the amount of asset purchased during the year. Depreciation will have credit balance. So balance brought down, that is opening balance 2 lakh and to balance carried down, that is closing balance, is rupees 3 lakhs. Similarly for machinery account, since it is an asset, it will have debit balance, balance brought down 8 lakh and balance carried down 12 lakh. Now students, during the year a part of machinery costing rupees 2 lakh, the previous depreciation is given here 1 lakh, it was sold off for 80,000. Remember, previous depreciation means depreciation that has been charged on this asset before this year, that is 1 lakh. So it will appear on the debit side of provision for depreciation account. To machinery account, previous depreciation, that is 1 lakh. Now remember, this amount of 1 lakh is transferred from this account to machinery account. So it will be written here as by provision for depreciation 1 lakh. This amount represents the depreciation that has been written off on the asset which has been sold during the particular accounting period. Now, once we have done this, let us balance the provision for depreciation account. The total here is 4 lakh. Out of this 4 lakh, we will deduct 2 lakh. So we will get by P&L account or by depreciation charged during the year. This is charged during the year. It comes to 2 lakh and the total comes to 4 lakh. So this account is now complete. Now let us come to machinery account. In machinery account, entries related to sale and profit and loss would be recorded. Now students, in this question it is clearly mentioned that the cost of this machine was 2 lakh. Until date 1 lakh has already been charged as depreciation. That means the book value is 1 lakh. 2 lakh minus depreciation, the book value of this machine is 1 lakh. Now 1 lakh worth of machine was sold for 80,000. So there is a loss of rupees 20,000. So we'll record both of them as by bank sale 80,000, by profit and loss account loss on sale, which comes to rupees 20,000. Again, let us understand how this loss has been calculated. This is the cost 2 lakh minus previous depreciation 1 lakh. So cost minus previous depreciation gives us an amount of 1 lakh, which represents book value. Now this asset of rupees 1 lakh was sold off for rupees 80,000. So there is a loss of rupees 20,000. Let us total this out and calculate the amount of asset purchased during the year. To bank account, purchase during the year, and remember it is the balancing figure. So students, the total on this side is 2 lakh plus 12 lakh, 14 lakh. 14 lakh minus 8 lakh, the purchase amount comes to rupees 6 lakh. And the total is 14 lakh on both the sides.